Shares in New York fell 3% last night, but today the Japanese market rebounded 10%, recovering nearly all of yesterday's 12% loss. And that rebound actually started well before the close on Wall Street. The US index bottomed during their afternoon and rallied into the close. The so-called Magnificent Seven tech stocks led the falls, with Nvidia down more than 6% last night and 26% in 3 weeks. Volatility, as measured by the VIX index, has spiked to the highest level since the COVID outbreak in March 2020. And that in itself causes more selling, because a lot of investors are required to reduce their debt when volatility rises, and that means selling assets. The yen has surged an incredible 11% against the US dollar in a month, which has brought the yen carry trade to an end. That's where investors borrowed cheaply in yen to buy US tech stocks, because Japanese interest rates are so low. But a rise in the currency mucks that up. And finally, the odds of a US recession have risen. Now, this chart shows the Australian All Ordinaries Index since Federation, with falls of more than 30% marked in, along with US recessions. The point is that they are sometimes correlated, but not very often. Today, the All Ordinaries rose 0.4%, with Commonwealth Bank leading the rebound. The digital audio-visual company Audinate had a very nasty prank, falling 36% after some disappointing results. The Aussie dollar jumped back above 65 US cents, but that had nothing to do with today's RBA non-decision. It didn't move when that was announced. And the big movers on commodity markets were precious metals, especially silver and platinum, down more than 4% each. And that's finance.